Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're jumping down into the world of Bitcoin, taking a look at what has been going on most recently and what I would expect to happen next. Here you can see that we have Bitcoin paired up with USDT. We're on the hourly chart and Binance is our data source. And we're going to be using Elliott wave theory here to just trying to map out what we think is likely to happen next, give ourselves some approximate targets to be working towards. Here we can see we have a 5-wave drop coming down here. Now this is basically a trend-based pattern. Okay, so 5 waves coming down. We can also see that we have 5 waves inside our final 5th wave as well. So basically we can see here that our 5th wave was overextended above and beyond what we would have expected for a 5th wave dropping down low. So we did hit a low target down here at about $18,626 according to Binance. And that's just kind of marked out with this dashed line at the bottom. Now here you can see that we had this really good bounce coming up. Now it's possible that this is our wave 2 complete. It's also still possible that wave 2 is not complete. However, we can see another 5-wave drop coming back down here, indicating that another trend to the downside has been started. So again, when we have a look at this, we could look at it as a 5-3-5-3-5 structure, which is exactly what you'd expect for an impulsive move to the downside, this being our wave 3. So if I move this wave 1 over here for a second and just put wave 2 up here, our next drop for wave 3 is approximately targeting out $16,114. Okay, so straight down into this kind of low range, and you can kind of get an idea. Now here we have 5-wave drop. We'll potentially be looking for a 3-wave move upwards, and if we actually take hold of this high point and this low point just here, we could be moving up towards our $19,774 on a 3-wave move. However, I wouldn't expect anything to happen too much too soon or anything like that, but we could be looking at some kind of move just like this over the weekend, and then we can bring down another 5-wave structure to the downside, right, which is where we start to really come into hitting this kind of 5th wave target down at the bottom here. Okay, so that's kind of what we're looking for. That's kind of what we're expecting to happen. Now, guys, if you haven't yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. But when in Discord, you can mention me, and I can send you some resources for Elliott wave theory, so you can get a good understanding as to what it is that I'm actually doing here, so you can kind of follow along in these videos a little bit more easily and understand what I am drawing out here, because these are not just random ABCs, WXYs, or 1 2 3 4 5 wave structures that I'm drawing on the chart. They're not random. They're all a part of the Fibonacci based sequence, and along with the way that people are behaving in the space. Okay, so essentially what we're doing here is we're tracking people's behavior with Elliott wave theory. So here we can see a 5-wave drop, a 3-wave drop coming up, another 5-wave drop coming down. Wouldn't be too surprised if we see little movements inside here as well of another 5-wave drop inside there, for example. Essentially you break it down and you can continue to drill down into these kind of structures, into these sequences of people's behavior. Once we come down to the low ranges, which I estimate, it is only an estimate based on the Fibonacci based numbers, that will drop down to somewhere in the range of about $16,114. Okay, this actually comes down into our macro 5-wave move, which you can see here this is our 4th wave move with a 3-wave structure, a zigzag, a 5-3-5 structure upwards, essentially coming down into this low range. Now we have an overlap down here because we do assume that once we complete our little 3rd wave move, we'll have a 4th wave bounce, which approximately will be 38.2% retracement of our wave 3 drop, which will take us down to about $17,805. So from there, dropping down to a standard 5th wave drop would put us at a low, a bear market bottom of approximately 15,137 to 15,728. However, this is obviously all subject to change based on how deep our wave 3 goes, how high our wave 4 goes, and of course how much of an overextension, if any, we get within our wave 5. But it gives us a bit of a ballpark figure to kind of be thinking about what is actually going on with this structure, what we would expect to happen next. And of course all of this is in a 5th wave move of a macro, which if I zoom out far enough, you can kind of see here we have 1 2 3 4, and all of this is happening inside our little wave 5. And if we were to zoom out even further, you'd get a much bigger picture on what is going on total. Essentially this is a 5-wave drop here, we have a 3-wave drop, we have another 5-wave drop here as well. So again, what we're doing here is a 5-3-5-3 overextended 5. Okay, all of that move could potentially be a wave 3 on a weekly chart, for example. So there's a lot of stuff kind of going on. I don't want to kind of confuse too many people with what is going on here, but we don't just want to rely solely on Elliott wave theory, because again, it's subject to where you draw the waves. Sometimes you might get something wrong, and you want to make sure that you kind of got yourself covered and with the expectations, right? So I like to use the stochastic RSI, which is a momentum indicator. This basically shows us whether or not there is the right sentiment behind a price movement, right? So, for example, if I drill in right here, okay, let me just focus in on this little section. Okay, so right here, we're kind of expecting a move upwards, right? And with this, we can see that the stochastic RSI is heading up to the overbought area, but we're not doing too much in the way of price movement. This is basically indicating to us that there isn't the right sentiment to push the price up, as in people are not willing to buy, they're only really willing to sell. Maybe they're shorting the market rather than long in the market, who knows, right? But essentially, what's going to happen here is our momentum indicator is going to come above the level of 80. This is going to indicate that we are overbought and we're going to signal a downward motion, okay? However, this is a weekend and volumes usually on the weekend are somewhat lackluster. And as a result of that, I'm expecting our correction here to be a little bit more complicated and more complex. So I wouldn't be too surprised if all we end up doing is kind of moving things around really slowly over the weekend, until we get to a place in time where we actually start to move back down in a bigger way next week. So I'm not really expecting too much in the way of price movement. We might, as I said, there's still the possibility that we haven't finished wave 2, so we could still have a 3-wave move with this just being something like this over the weekend, and we just steadily move our way up towards maybe 21,400. Alternatively, all we end up doing is just slowly working our way upwards and staying below this key level just here, which would put us anything lower than $20,918, right? And essentially all you have then is a wave 2 that's slowly working its way up here in maybe a more complicated or complex pattern. So again, with a wave 2, it can be simple or it can be complex. If of course we have finished our macro wave 2 here, then this is what would be classified as a simple correction. It's just basically a straight move up there. No real patterns to it, just bam, you're done, and it's over. Okay, whereas a complicated and complex correction could be a series of waves that maybe might be like a 3-wave move, another 3-wave move, and another 3-wave move. It might be a 333 or a 333, something to this effect, where we end up moving up to the higher ranges, but it takes a long time to kind of do that, and you're kind of just bouncing around a little bit, and basically this becomes a complex corrective move, and essentially from once that is done and we stay below this area and we have another 5-wave drop, we know that we've actually started our macro 3-wave move to the downside. So yeah, guys, just a gentle reminder, if you have found this useful and informative, hit the like button. I do appreciate that. And if you are new to the channel, make sure you subscribe as well. Really want to be kept up to date with everything that's going on, and why not subscribe, tap the bell. Okay, so that's kind of what's going on here, right? And this basically maps out our kind of bear market lows. However, if I jump up into our weekly chart, okay, and we were to start to review the weekly patterns, we could argue that it's possible that we actually start to bring down Bitcoin into some crazy low levels. Okay, so what I'm going to do is I'm just going to measure this distance. So what I've done here is I've taken a fib from this low level and I've taken it to that high level. Okay, and basically all of that there is 100%. Okay, so that fib that I've just got is 100% from this level to this level. Okay, I then just moved it over to the top of this level here, which is basically a bounce. Okay, so if I just remove all that, essentially this is the first kind of bounce right here to the upside. It's a 3-wave bounce as well. Okay, so if I draw on an ABC, we can go A, B, and C. We can see it's a 3-wave move. Okay, I mean that's really important to note, but anyway, nonetheless, it's right here. Now, when we drop down, we can see that we've come down to this 1.382 area. Now, this is an important area to hit because historically we haven't had a level drop down this low. Normally, we've actually bounced from 1.236. And, as we drop down to 1.382, we have to consider, what's going on. We know that we're looking to drop down again a little bit lower towards $15,000. And you can see that the 1.618 right down here comes in at $14,500, or to be more specific, $14,618. $14,615. Now, when you hit a 1.61A, what you're actually doing is you're creating a trend to the downside. So what you have is a wave 1 or wave 2. If we hit 14,600, you hit a trend line, you create a trend to the downside, right, from a psychology perspective. And basically the sentiment here at this point is, bam, this thing's going down to 10K, right, and basically sell, 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 sell. You hit a trend to the downside. However, you normally find yourself with a relief bounce first, okay? And normally 38.2% retracement of whatever this move here is, okay? So normally you'd have that. Then, of course, you'd pull back down into a final move to the downside, okay? So, you know, this is still a pattern that could play out, and it could take us down. I don't think sub 10K. I don't think necessarily it'll be sub 10K if this does play out, but it will be very, very close to it. And again, this is things that haven't happened in Bitcoin's history before, which means we're rewriting the history for Bitcoin. Okay, so again, this would have a profound impact on altcoins as well. It would obviously drag out the bear market for a significant period of time longer as well. Okay, so this could be, you know, pretty negative on the crypto space. Many projects will probably die if this does happen. There will be many altcoins out there that just simply cannot survive this kind of level of damage, right? You've got to bear in mind that many of these altcoins are already lower than 90% from their previous all-time high. Okay, they're already going to be running low on reserves, cash flow for running their businesses and their projects. They're obviously going to be the heavy hitters that are going to be okay. Ripple XRP, for example, they're expanding business. They're doing pretty well. You've got Cardano. I think they're going to be okay and survive. Ethereum will be okay. Bitcoin will be okay. But then you kind of got some, you know, micro cap coins that might not be as successful, right? And so we should be really considered, you know, and do some solid research on the teams and the projects and whether or not they've kind of got the ability to kind of survive such damage to the crypto market. Now, there's no guarantee that this plays out, but I do want to kind of show it. I personally think that the structural end is $15,000, right? So right down here. So as long as we don't have an overextended fifth wave taking us down to 14,600, I think there's a low probability of this particular structure playing out. But there is always going to be that probability that it does play out, okay? So we should be mindful. And I was saying this to our Patreon members the other day. Actually, I think it was yesterday, and that essentially what we want to do is, although we have all of this pattern mapped out and we know that, you know, we're targeting out the $15,000 range, the main thing that we want to really focus in on is this little area. Once you actually hit that bottom, it's the structure of what forms afterwards that's the most important. It's the one that's going to indicate to us whether or not we are going to be going up into new all-time highs or whether or not we have more downside. Okay, so that structure right there is so important. And, you know, it's to say that we will probably get a bounce from this low area. It should be a pretty significant bounce, but it's whether or not that's a bounce or a trend. Okay, that's the difference. So that's something that we obviously can't see right now. That's something that we have to wait and see how things play out once we actually have the bottom and what actually happens, you know, how people actually react to the lows and whether or not we actually start to see, you know, good move back to the upside. Okay, so that's kind of, you know, Binance data here. I won't go into any more on that, but if I come up into this one here, this one shows us again, you know, this is BitStamp Data. It shows us all of the kind of the different kind of runs that have been going on, and you know, here you can see that we tested this low area of 1.382, and if I actually just show you what it looked like over this side, for example, we take this initial kind of low point, we grab that, we move this over into the bounce just here, right here, and here you can see that, you know, we came down a little bit over the 1-to-1, a little bit above the 1.236, so we know that that one was actually not as deep. And then when we come over to this side as well, we can do the same exercise. We can take this point, take that point, move it over to here, and you can see, let me grab this, the bear market low bounced from 1.236, right? So history, we haven't gone down lower on the bounce than 1.236, yet here we are looking to drop down lower than 1.382. Okay, so very significant you know, drop from this, right, from that point there. Okay, so just kind of wanted to point that out. Now also on that note, what we'll do is we'll also throw in that Gaussian channel, which is a good indication of value. Okay, so when it's green, basically, you know, you are looking at maximum value in the space kind of pushing up, and when it turns red, it's basically kind of indicating to us that it's undervalued, right? It's considering the average price, right? Now what's good about this Gaussian Gaussian channel, and I know I did kind of write it off back in 2021, and it's all because of that one green candle right there, closing outside. But I think we can now rule that as what it is, right? It doesn't matter. Essentially, as soon as you close inside it, you're kind of done, right? So even if you close outside of it. So down here, you can kind of see that we had this initial pullback with the Gaussian channel turning red. It was about a 4-week period. We then traded sideways for a week, and then another 2 weeks down, we finally hit the bottom. So as Gaussian channel's red, we basically bounce up and then we pull back down. Okay, so that was the 2018 bear market. Now, if we come over here, very similar story. You can kind of see we pull back down, we bounce up, and then we crash right down into the bear market low. Now, when we take a look at the current position, you can see that we pull back down, the Gaussian channel's turned red, we've bounced, and we're just now looking for that final drop to the downside, which, I estimate to be approximately 15,000, obviously. But obviously, what happens next will be the key thing. Now, from the Gaussian channel's perspective, in history, we haven't seen that kind of bounce up after we hit that bear market low and then drop down again. Okay, we haven't seen that. It's possible that you could argue, no, in fact you can't, because even that would be different. So it's not happened before. So we'll have to kind of keep an eye on that. But essentially it's doing exactly what it had done in the last 2 bear markets, where we pull down, Gaussian channels turned red, we pulled down, we hit, we bounce, and then we drop down one more time, and that's the bear market low. So it's going to be interesting to kind of see how that maps out, if that stays that way. But everything's looking pretty good for Bitcoin at the moment, and I'm still looking at the good accumulation zones. I do want to just say that there's a low probability at the moment that we do turn that weekly Bitcoin chart into another impulsive move, dropping down towards that 11K area. It's a possible scenario, but it's not very probable right now. So don't necessarily want to get too scared out. I do expect a significant bounce once Bitcoin hits these low targets of around 15K. Altcoins will surge massively at the same time, in my opinion. So it's always a good time to be thinking about dollar cost averaging into the market. But do remember, guys, I am not a financial advisor. I cannot offer you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I see it here today. And guys, I'm going to leave the video there. If you found it useful, informative, maybe even entertaining, hit the like button. I really do appreciate that. If you're new to the channel, subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all of that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.